Now, it includes more than 100 big corporations providing services, like wide range services in medical services. And as I already told you, you probably know all this organization, all these services which they provide. Now, when you look into United States and when you analyze those companies, you discover that some of them have kind of more business in the areas with the private insurance, where like wealthy, would say, people who have these private programs, they getting benefits, okay? And also you will see other companies which provide services to general public or government-sponsored programs, or maybe programs for Medicare, so where people just get completely sponsored from government, so they don't have to pay themselves. And when you analyze in this type of companies, you understand that even though the model and business is very similar, but then you probably understand that the current situation which happens in the political terms in the United States might affect companies in different companies in different way, because you probably heard that a lot of politicians, when they're trying to get elected as a president in the United States, they promise that they're going to attack health service, and they're going to do a lot of changes in order to reduce this huge margin which some companies are receiving. And majority of companies which are receiving, they are in premium sector, right? And if they're going to be affected, majority of them, like private sector, are going to be affected, not the government-sponsored service are going to be affected, because the margin is already quite low there, right? So you have to understand. So if you have two companies and one is fully deriving income from and revenue from the private sector and from the high margin services, those type of companies, they're going to be suffering if some changes happens. But at the moment Biden came to the kind of presidency, and he didn't announce anything in order for investors to be worried about medical service industry and the general medical health like industry in general, because every president promises that they're going to do something about it. But I've been investing for the last more than 10 years and no one did, okay? So they just promise it, but it's probably like election promise, which never comes true. All right, and as we can see, we can divide companies but like that, but also there are different companies. Some companies, they more like a narrow niche working. For instance, they might provide some cosmetic like services, all right, some dental services, other childcare services, and other probably adult services. But other companies, they provide quite wide range of services in this industry. And when you're choosing one or another company, you have to understand that the current situation, what happens with pandemic, or probably what is going to happen, might affect companies in different way. Okay, how, and you can see here, it's home care, medical centers and hospitals, aged care, diagnostic, insurance, like dental, like surgery, whatever, different areas in this particular service. Now, and the COVID affected some companies in more ways than other companies. For example, less people were visiting medical centers, right? And because they were afraid if they go there, they might get the COVID, right? So they try to avoid it. And some surgeries and medical procedures were completely canceled because especially for people with severe diseases, because they thought that if they catch the COVID during this type of operation, because they will weaken, there is a chance that they won't survive. So, and a lot of people postpone those operations to this time, right? So this is important part. Also, some like additional treatments, especially in physiotherapy, especially group therapies, they're also canceled, right? And of course, those companies, they suffered in their revenue. At least a lot of investors believe that they're going to suffer. That's why some of the companies in the medical service industry, but in general in health-related industries, they dropped down. Now, guys, we analyzed last year WBA and CVS Health pharmaceutical chains, and also a lot of people believe that those companies are going to go into drain, and the prices dropped quite a lot. but you see results of those companies. They are selling goods and they back to normal, and the prices start moving up as well. Okay, this is great stuff. Now, when you look at medical service industry and, for example, pharmaceutical industry, you have to understand that very often they interrelated, and very often we cannot really specify what industry this company belongs to, because even if we take WBA, which we analyzed last year as a pharmaceutical industry, you know that they have insurance company, so part of their business is insurance, but also they have medical centers, so part of it will be medical service industry. Same as the company which we're going to talk today, they also have some services, just pure services, but also they have pharmaceutical services, and also they have insurance services. So a lot of companies, they integrate in different industry in general. So that's why we have to be aware of it. And when we see that under industry wide range product companies, that will be affected as well. All right, so if you go to value line, you probably read that a lot of information which has just told you that people expected that this industry will suffer quite a lot, but it didn't, especially for the last quarters of 2020. The results of those companies in this industry, they actually were much better than people expected. And if we look at the size of these different companies, so we can see that the biggest company is United Health, and our company, which we're going to cover today, is here. You can see it's CNC, right? Centene. So it's not the biggest company, even though it's $37 billion in capitalization, but it's not as big as United Health. All right. Now, the way I did it, as always, I went to value line, and I just went to screener, and I chose all medical service companies, and there were 103 companies in value line universe. After that, I added only a few parameters. One parameter was the earnings per share has to be from 5% or more for the last 5 years, so the growth rate. Okay, and you can see out of 103 companies, only 25 companies left. So 78 companies, they're actually growing less than 5% annually in average. Right? So we kind of drop them off. Then added 5% projected growth with the next 3 to 5 years. So because we not only want that the company grew in the past, but also we want certain projections that management projects that the company is going to grow in the future as well. And out of these 25 companies, only 15 left, another 10 dropped. So then I added that the valuation, it has to be lower than 20. Now, the main reason why I put 20, because the market is so high right now, a majority of indexes 33 or 40 or 44 even, right? So I didn't expect that I would find any company below 15. Although if I put 15, I would probably get only 1, 2, 3 companies right here. 4 companies would be out of 9. I put 20, so I have here a bit more companies, 9 companies, and now we can in details analyze this company. So what I did, I downloaded the data and inserted it in FinViz. And as you can see in FinViz, there are a few parameters which we can see here. And what I did, I looked technically what I can, on each company. And probably you can see that some majority of these companies, they're high. So especially like if you look at the LH, MOH, right? So they're quite high, and also CI high, right? And from some of them they low in ATM, but in general it's pretty high in valuation. So what I've done, I identified 3 companies which kind of worth looking. One of them is Humanica, it's HUM. Another one is United Health. It's the biggest company in this industry. Okay, so it's UNH, and CNC. Now, I like the CNC the most from the growth perspective, from the profitability, etc. So that's why I am discussing it tonight. But definitely, guys, what I recommend for you to do is just analyze those companies too. You know, so Humanica and United Health, especially taking into consideration that United Health is actually not only the biggest in this particular industry, but this is the biggest company which is included in, not the biggest company, but it's kind of percentage of Dow Jones. United Health has the biggest proportion of Dow Jones. okay, at this particular moment. So that's why it makes sense to have a look, okay, on those particular companies. Now, this is how industry in general look, and if we look here, CNC, for whatever reason, PE ratio here is 19, whereas if we go now to value line tells us it's around 12, okay, and so it's like whatever they expect in the future for PE ratio and FinViz. So some kind of mistake is here, definitely, because PE ratio is definitely lower than 19, okay, CNC. And Humanica is 15, and United Health here is 20. Although in value line, all PEs are a bit lower than current information. All right. Now, this is the general overview of the industry. That's what happens. And as we can see that a lot of companies, right? A lot of companies, I didn't put here the companies which are not growing, okay, but still you can see that majority of the companies for the last few months, they kind of drop in price, right? So this company, this company, this company, this company, right? Some of them on high, but a lot of them dropped in price. And it reflects the general consensus about this industry, not because of some companies. If you look at Humanica, if you look at United Health, if you look at CNC, you won't see a lot of problems within the business itself, themselves. And usually when they drop together. And it always tells you that it's something happening within an industry rather than within one particular company.